Amazon had a stellar run last night. It went up 10% and closed at around $140 after touching a 143.5 as the day high. Remember, its 52-week high is around $146. So it's pretty much trading at 52 weeks high right now. Hello everybody and welcome to Sinhanomics, the money machine. By now you have understood I'm going to cover Amazon today, and Amazon had a stellar run, stellar performance as well for their Q2 2023 earnings. And actually it has beaten the street on almost all the fronts, be it revenue, be it operating income, net income, or the earning per share, you name it. It has a little bit of a not that great performance in the AWS, so let's cover and discuss that. Let's discuss the financials. Well, it actually reported $134.4 billion revenue for Q2 2023 versus $131.5 billion estimated by the analysts or the street estimates. And that was 11% growth year over year. So stellar performance from the revenue perspective. From the operating margin perspective, it's $7.7 billion, which was actually 132% growth year over year. But we need to look at the trailing 12-month TTM data because it had plenty of losses in the previous quarters. So with the TTM, it was at $17.7 billion. So you can imagine this quarter $7.7 billion and the trailing 12-month $17.7 billion, which was 16% growth year over year. Not that bad. If you look at from the net income perspective, it's $6.7 billion, and for the trailing 12-month, it was $13 billion, roughly 13 to 14% year over year growth. As I mentioned, earning per share as well, it has beaten the street. The earning per share was 65 cents as compared to 35 cents that the market was expecting. So it's a solid beat. From the free cash flow perspective, actually it came out as pretty much $7.9 billion, and that is again TTM, trailing 12-month. Operating cash flow actually has jumped 74%. So great result overall from the balance sheet indicators perspective as well as from the P&L perspective. And that's why the market was so jubilant about it. Now let's look at its segments. So if you really look at Amazon's business, we can actually divide that into 4 different segments, or 3 different segments I can call it. One is the e-commerce, which has 2 parts of that, North America and the international business. The second one, which is the crown jewel, is actually the AWS. And the third one is pretty much advertising. And the rest are like pretty minor. So let's not worry about it. So let's look at from the e-commerce perspective. From the North America business actually reported $82.5 billion revenue, which was 11% growth year over year, and its operating income was $3.2 billion. So it's in profit. It's a profitable business, North America. When we look at the international business, guys, it's $29.7 billion revenue, and it had a loss of $0.9 billion, $900 million loss, even though it has grown 10% year over year. So international business is kind of growing, but it's kind of from the profitability perspective, it's struggling, I would call that. But the good news is that it's improving. So if you look at from the trailing 12-month TTM data, so international business is actually $121 billion revenue, and trailing 12-month loss is around $6.8 billion. So out of the $500 plus billion total annual revenue, 25% of that, $121 billion, which is international business, is actually giving a loss of around $6.87 billion. So that's the point to note. Now let's come to that. So combined, if you combine both of them basically, so you are actually talking about 100 $110, $112 billion business for this e-commerce with a roughly $2.3 billion profit. So 2% operating margin. Okay, let's come to the AWS, which I mentioned rightly is a crown jewel. AWS has been growing quite a bit for the last consecutive quarters, but this quarter it has a little bit disappointed from the earnings perspective. So AWS actually had a revenue of $22.14 billion, and its gross margin, actually operating margin, was something around $5.44 billion, which was negative 6% growth year over year, which the market did not like. Having said that, with $22 billion AWS revenue, actually it has recorded a growth of 12%. So it's growing, but it's kind of little bit struggling or slowing down from the operating margin perspective. And I'll come to that a little bit later, that why it's happening. Let's look at the third segment of that, and that is the advertisement business. So advertisement business is around $10.7 billion versus the market expectation of $10.4 billion. But guess what? It has a 40% margin. So very profitable business if you look at from the advertisement perspective as well as from the AWS perspective. In actually, advertisement business has grown as well. So it is actually taking some advertising dollars from Google and Facebook, etc. So that was pretty much like the overall financials of the company. Now let's look at that. What Amazon is doing right, which is giving them this kind of stellar performance. Number one, they are focusing on the cost cutting. For the last almost 6 quarters, consecutive quarters, they have been reducing headcount. So far they have reduced 27,000 headcounts, and that was a major cost cutting initiative that they are actually driving. Another one, as I had covered earlier, they have 17% stake in Rivian, the electric vehicle manufacturer, the truck manufacturer, which I have covered that in details earlier. Last year they had actually recorded a $4 billion loss in that investment. This year, this quarter rather, they are actually seeing a $0.2 billion gains. So $0.2 billion gains versus $4 billion loss in the last year Q2 is a good flip for that, and that's going to go up a little bit as Rivian is ramping up its production of the EV. Coming back to the e-commerce side of that, it's been growing pretty fast, and if you look at the e-commerce, it's actually pretty much on the lying on the 3 pillars. One is the advertisement by Amazon, another one is all the fulfillment, and the third one is Prime. So from the advertisement I just told you, it has a solid revenue growth closed at $10.7 billion with 40% gross operating margin. So that's doing pretty okay. From the fulfillment perspective, Amazon has actually leveraged the regional fulfillment, and that's actually giving them a lot of muscle power from the profitability perspective. Yes, you heard that right. It's actually leveraging the regional fulfillment now, and that's actually a good initiative, giving them positive returns, and they will continue on that. Prime is another one where they are focusing on that big time, and they have actually recorded the fastest delivery time actually, right? And now they are actually talking about same day delivery, next day delivery, like that. So Prime is another one where they're actually focusing more on the delivery aspect of that to increase the customer satisfaction, and they have been doing pretty well in that. Guys, I think Amazon is the best from the delivery perspective as far as the timing is concerned. I also personally feel that they are quite good from the customer satisfaction perspective. If you don't like your product, you can return it, and that's a big thing that gives the comfort level that gives to the customers. So these are the 3 pillars of the e-commerce. The good thing to look at it is that the retail business is growing as well. For the last 7 years, in fact, their EBITDA margin has been trading at around 2.32%. And if that goes to 5% business or margin, it will be a very good business for them. Well, the second thing, as I mentioned, AWS, the crown jewel, what they're doing good in the AWS space. Guys, Amazon is actually now offering, or AWS is now offering, the complete stack of the AI. Their new release of the AI and the AWS combination, pretty much in the generative AI release, I would call that, is pretty much based on the AI and AWS chip. Inferentia, and there's one more chip there, which they are actually their own chip that they are leveraging that. And actually, the CEO did mention that the customers are pretty much now not focusing on the cost optimization perspective, and they're pretty much over the cost optimization phase, and they are now looking more into the workload, the increase in the workload, and that's where it's providing with its chip and also with its generative AI release. So good thing to note here is that they are offering the complete stack. And not only that, if you look at from the database, if you really look at from the generative AI perspective of the large language models, it's very important for the customers to have the whole data in the cloud. And from the database perspective, data warehouse perspective, AWS is pretty much best in the class today. And that's why it's able to offer the best stack, I would call it, a complete stack in the generative AI cloud combination. And as I mentioned, they have their own chip now, Trainium and Inferentia. So they're doing that. Bedrock is another one they have actually launched. And another one to expedite the coding process, they do have the Code Whisperer. Yes, you heard that right. The Code Whisperer, and that has been quite successful as well. So if I really look at that from the AWS perspective, the growth has been 12%, but Amazon thinks they wanted to kind of give an explanation for the declining operating income. So as I mentioned, from $22.2 billion, the $5.6 billion operating income, minus 6% year-over-year growth, that actually created a little bit of a doubt, or a little bit of, it gives an indication that that business is a little bit slowing down due to the competition. And that's something they will be focusing more on that. So these are the things actually AWS is doing pretty well from the overall perspective. Having said that, guys, as I mentioned, this is the first quarter where they've given the biggest beat in the profit perspective, in the earning perspective, since 2020 Q4. Yes, you heard that right. It's almost 3 years. This is the best result for the last 3 years. And we need to see that what they are going to deliver in Q3. So in Q3, their guidance is also quite bullish, much better than what the market was expecting. So from the revenue front, they are saying that the revenue will be pretty much around $38 billion to $43 billion mark. And from the operating income perspective, they are actually forecasting 5.5 billion to 8.5 billion range, as compared to 2.5 billion in Q3 2022. So that is a big jump actually. Even if they go to the lower end, 5.5 is pretty much 120% increment. So, and that's what the market is loving about it. Not only the overall operations, the cost cutting measures, the discipline, as well as the key focus on AWS and the advertising business. At the same time, if they are able to little bit make it better, the international business, which is kind of, I would say, pretty much in loss right now, I think they would be pretty much on the good path. Analysts are quite bullish about that. In fact, in my previous coverage, I had already told that it will hit $150 by the end of this year, when it was trading at around 115, 120. So as you can see, already 140. I think that if they are able to deliver what they are promising or the guidance they are giving in Q3, I think in 1 year's time you will see Amazon at $200. Yes, you heard that right. And that's my personal analysis. Whereas when we come to the established analysts, the analysts are actually forecasting or giving kind of a guidance or the price target of somebody is talking about $155, somebody is talking about $165. The highest I have heard is pretty much $165, $170. But I think if they are able to deliver good number in Q3 and in Q4, you are going to see that skyrocketing to almost $200. And that is a big jump, guys. $60 increment from the last night's closer. That's almost 45% return from today. Having said that, I have covered Apple in the previous video as well, and Apple is a constant compounder. Unlike Amazon, which is kind of in a bumpy ride. One quarter is so bad, another quarter is better than the last 3 years, etc. If you look at Apple, it's pretty much like a constant compounder. If you look at Apple's price chart, it's pretty much like a diagonal in a rectangle. Investors love stocks like Apple, who don't give too much surprises. Having said that, the market is reacting big time for no reason, and Apple was down $9 last night. These are the time to buy stocks. Well, having said all those, these are my personal views, personal opinion based on my personal analysis. Don't listen to that and act accordingly. Please consult your financial advisor before making any investment decisions. Guys, remember, Synanomics' main aim is to create financial awareness so that you can start analyzing the companies, start analyzing the P&L, balance sheet, ratios, and make your own decisions and make money. If you like this kind of videos and the contents, don't forget to like, share, and subscribe. With that, it's a goodbye from your friend and finance guide, Pankaj Sinha. Bye-bye.